All right, let's jump right in. I'm absolutely thrilled to have you here for today's explainer, where we're going to roll up our sleeves and really demystify the foundational concepts of business finance. Look, whether you're trying to scale a brand new online store or you're just fine-tuning your current operations, you absolutely need an airtight financial foundation. It is non-negotiable. So we're going to build that foundation together today, block by block.
Okay, let's dive into this with a quick scenario. I want you to picture opening a brand new business, and boom, it generates an astounding $1 million in sales during its very first year. Sounds like an absolute dream, right? I mean, most people would be popping champagne. But what if I told you that exact same business could still end its first year completely bankrupt? I know, the cognitive dissonance of a $1 million business failing is kind of hard to wrap your head around at first. But in fact, 82% of businesses that fail do so because of cash flow issues. Not a lack of passion, not a lack of hustle, cash flow. So here is the hard reality check we all need to hear. Sales do not equal success. Thousands of businesses fail every single year, and it's not because they don't know how to sell, and it's certainly not because they lack enthusiastic customers. They fail because they simply don't understand business finance. You see, a lot of entrepreneurs fall into this really dangerous trap of believing that more sales automatically means more success. But in reality, sales are literally just one single piece of a much larger, much more complex puzzle.
To get a really firm grip on this puzzle, here's our roadmap for the explainer. First, fueling your business. Second, revenue versus profit. And finally, fixed and variable expenses.
Section 1. Fueling your business. Understanding finance.
So, at its core, business finance is the process of planning, managing, and controlling the money used in a business. It sounds pretty straightforward when you read it out loud, right? Actually, scratch that. It's incredibly deep in practice. Finance isn't just about making money. It's about making really smart, calculated decisions to ensure your company actually survives. As an operator, you're constantly juggling questions like, how much should we invest? Or should we take out a loan? Or can we actually afford to hire more employees right now without sinking the ship? These decisions entirely dictate your survival.
And this brilliantly illustrates the whole concept. Think of finance as the fuel inside a car. You could have a state-of-the-art, gorgeous sports car, but if it has zero fuel in the tank, it's not going anywhere. It looks incredible, sure, but it's completely useless. It's the exact same thing for a great business idea without proper financial management. Without that financial fuel, even the most innovative, world-changing idea is just going to stall out. Every business needs money to operate, and how you manage that money, well, that's your engine.
Let's make this super concrete and bring it into the real world. Imagine you're opening up a cool new local coffee shop. Before you even unlock the front door, literally before you serve a single latte to your very first customer, your business already demands a massive amount of cash just to exist. Just walk through these realistic upfront costs with me. You need furniture for people to sit on, you need those crazy expensive commercial coffee machines, ingredients, obviously, you gotta pay rent for the space, you need marketing so people actually know you're there, and you absolutely have to pay your staff their salaries. If you haven't managed your finances to cover all of this beforehand, your coffee shop is dead in the water before opening day.
So the absolutely crucial point here is this. Finance turns uncertainty into strategy. Imagine your coffee shop does open, and customers are just flooding in. Fantastic news! But if all those expenses we just listed are growing faster than the cash you're bringing in, your incredibly busy, popular shop is actually bleeding money. Successful companies simply do not guess. They rely on cold, hard financial data to balance their income and expenses so they can purposefully drive future growth.
All right, let's move on to Section 2, revenue versus profit, the crucial difference.
Let's look at a quick case study here. Meet Sarah. Sarah owns a trendy online clothing store, and during one amazingly good month, she generates $20,000. 20 grand. That is a massive, incredibly impressive number, right? Now, that number represents her monthly revenue, which is basically all the money her business brought in from selling clothes. It's so easy to look at that 20 grand and feel like, wow, I've made it. But hold on a second. Let's move to and see how this builds when we break down that $20,000. Because Sarah has monthly expenses that have to get paid. She spent $8,000 just buying the inventory, the actual clothes she sold. Then 3 grand goes to employee salaries. Advertising her store on social media, that cost another $2,000. Shipping the clothes out to her customers was $1,000, and she spent $500 on essential software and website subscriptions. So systematically, expense by expense, we see her initial revenue getting completely drained.
Notice something important here.
We start with her big top-line revenue of $20,000. But when we subtract her total expenses of $14,500, that leaves a bottom line of just $5,500. That right there is her true profit.
I mean, just compare this $5,500 to where we started. Her business generated a massive 20 grand in sales, but Sarah only actually gets to keep about a quarter of that as true profit. This proves a vital, non-negotiable lesson. Smart businesses do not celebrate sales alone. They celebrate healthy profits. Guys, there are companies out there generating millions of dollars in top-line revenue, but they're earning literally zero profit because their expenses are completely out of control. Smart owners focus relentlessly on increasing their bottom-line profit, not just chasing flashy sales numbers.
Which brings us perfectly to Section 3, Fixed and Variable Expenses. The types of expenses. Now, what's really interesting about this slide is how it breaks down the two distinct types of costs every business faces. First, you have fixed expenses. These stay exactly the same every single month, regardless of how much you sell. Whether you sell one t-shirt or 1,000, your office rent, your core employees' salaries, and your insurance premiums, they do not change. They are static. On the flip side, variable expenses scale directly with your sales volume. If you sell way more products, well, you have to buy more raw materials, you pay more for shipping, and you pay out more in sales commissions. Understanding the difference between these two is absolutely essential for planning how your business is going to grow.
And that brings us to a core philosophy that every great operator lives by. Making more money is important. Keeping more of that money is even more important. The most successful businesses in the world are constantly monitoring both their fixed and their variable expenses, finding clever ways to reduce unnecessary costs, without sacrificing the quality of your product, of course, is the absolute fastest way to improve your profitability. Because remember, every single dollar you save on expenses is a dollar that goes straight into your bottom line profit.
So, let's quickly recap the foundation we've built today. We've defined what business finance actually means in the real world. We've seen exactly why finance is the essential fuel for every single business. We've clearly separated the vanity metric of revenue from the cold, hard reality of profit. And we've broken down the two main types of business expenses. Now I know, these concepts might seem pretty straightforward, but I promise you, they form the exact same financial foundation used by every successful company in the world, from your favorite little local coffee shop all the way up to the biggest global corporations.
But hey, our journey into the world of finance definitely doesn't end here. I want to conclude this explainer by leaving you with a really provocative final question to chew on. Why do businesses with high profits still run out of money? Seriously, think about it. It sounds completely crazy, right? How can you have great profit margins on paper and still run the bank account completely dry? Well, it has everything to do with cash flow, assets, and liabilities. And that is a fascinating puzzle we are definitely going to explore next time. Until then, take these foundational blocks we just covered and start looking at the businesses around you through a brand new financial lens.